All right, welcome back, everyone. Hope you guys having a great time as always. We're here today with our analyst for High Tide, the specialist on High Tide, and today is June the 3rd, 2024. So today's live is going to be dedicated mostly to just discussing High Tide, and we'll be talking about the opportunity. As full disclosure, I have a position in High Tide. You have a position in High Tide?
Definitely. Yeah.
So I guess we'll get started by saying, or my first question that I think the audience might be thinking as well, what is your current position in High Tide? Not at dollar figures, but as a percentage allocation.
So most of my wealth is tied up in real estate. And the last time I talked to you, my high tide position was about 5.5% of my total wealth. And now it's closer to like 7 or 7.5%, something like that.
Mm. So it has increased at least by 50%.
Well, I bought some more shares and it went up.
Yes,
So
it has gone
yeah.
up. That's
Yeah.
So for everyone listening, actually, I want to credit you, Blake, as the originator for the idea. You're the one who actually showed this company to me. And I'll say I was quite skeptical in the beginning. I think you remember when you first told me, I was like, oh, no, not another one of these kinds of companies. No, I'm not interested. You're like, wait for it. And then you explained to me the thesis, which we're going to be going over today. And then I warmed up to it, and then I ended up buying a position in it. And I'll talk about maybe briefly with you. We can go back and forth on an additional trade that actually I wasn't even paying attention to, but one of the club members, they pointed it out that it looked like a very interesting opportunity to continue to acquire shares at a valuation under $2 that is sort of closed now, but it was really interesting at the time. So we'll talk about that later. What is this company?
So this is a Canadian cannabis retailer. Up in Canada, it's a more mature market. They've been fully rec for about 5 years now. The situation up there has gotten really rough, and the entire industry was put under dramatic stress from competition. And a huge number of the participants decided they were going to have to adapt or die. And so Sundial bought a chain of liquor stores. Tilray started growing fruits and vegetables, and High Tide switched to a discount model. And that really caught my attention. Was in an environment where there's already a price war going on, and there's a race to the gutter for the price of cannabis. This company is like, I'm just going to lean into it. I'm going to switch from trying to charge a fair price to trying to capture that discount customer, where a significant chunk of people, in any given industry, a significant chunk of people are after really high end stuff, and also a significant chunk of people are just plain after the best deal, like the best bang for your buck. And this company really targets that second group of people where you want value. You want to gain more value than the price that you pay. And that is the core essence of why I'm so interested in this company. So they basically use cannabis as a loss leader, similar to like a gas station with the gasoline and the lottery tickets and the cigarettes and stuff. That's really just there to get you in the door. Their actual money making is mostly done off of ancillaries. They import a lot of glassware from parts of the world where it's really cheap, and they ship it in by the cargo container, and they pay for it by weight. I do not know specifically how much they pay for like a glass piece, but it's real cheap. It's like, $3, $4, $5. And then they turn around and they sell that to customers in North America and in Europe for like 15, $20 a piece. So the margins on importing glassware are really good. They also own, of the top 5 cannabis-based websites on the planet, this company owns 3 of them. And most of that has to do with importing glassware. So for example, they have about 3 million customers in the US. They don't have a presence in the US. They don't have any stores in the US, but they have all of these head shops that are busy buying their glassware. And so they already have a lot of US exposure, even though they're a Canadian company. They also have exposure to Great Britain and the rest of Europe. They're eager to expand into both Germany and the US as soon as it's available. And really, what made me fall in love with this company was the business model. The fact that they are capturing market share, they're growing revenue, they're driving everyone else out of business. Since the last time we talked, Capital, yet another Canadian retailer has filed bankruptcy.
I saw that you sent
Yeah,
me. Let me
yeah,
pull that up.
yet another one. It seems like every 3 or 4 months, another one of their competitors is just tapping out because they can't keep up with this business model. It is too competitive, and that is a big part of why I'm here. Not just here on this channel. Why I'm here as a shareholder is because the potential for this company to eventually become, like a Tim Hortons or a Starbucks of its industry is there. And I can't guarantee that, but I'm here for the potential of it.
Where? Hold on, this link did not open for me. Okay, here we go. So here's the link you shared with me, and this is showing another Canadian retailer going bankrupt. And the reason why this is important is it's showing High Tide's ability to really put pressure on these guys and slowly but surely take them out.
Yeah.
Competition is just coming for all of them in the form of High Tide. That the tide is coming.
Yeah.
So they make a lot of profits mainly from these paraphernalia, correct?
Yeah.
And the actual product, I'm using the word product for reasons, because it's on YouTube, is they get acquired how? Just highlighting that once more.
So every time they open up stores in a new market, they make contacts with local producers.
Yep.
And so they will acquire it at the wholesale rate from local producers, and then they will turn around and flip it and sell it for, I'm guessing, like a 3 to 5% margin or something. Pretty low margins on the actual cannabis itself, on the flower and the concentrates.
Okay, so I mean, good thing about there is if we analyze it sort of like any retail store or a grocery store, a lot of what people do that is sometimes bad is when they do their analysis on these kinds of stores and they see the margins are really low, they miss actually the full picture, which is actually only half of the equation. It's all about inventory turnover.
Yep.
So if you're turning over your inventory pretty quickly, that 3% margin is suddenly very powerful too. Okay, so I actually, just so you know, I had some of the club members. Well, I didn't tell them to do this. They wanted to do this. In Canada, they
Okay.
went and explored the store, and
Cool.
then their findings were the following: that they came back and said, yeah, it is a lot cheaper than the other local competitors. They went to the other local competitors. It was rather empty. They went to the High Tide store, and it was not empty. They actually signed up for the free membership, not the paid
Sure.
one, but
Sure.
they saw that the pricing, because they are not, they said themselves, they weren't not that frequent of a consumer that it made too much sense, at least for the time being. But let's talk about that membership, because I think that's one of the really interesting parts about this business. When I saw the growth in the paid memberships, my ears perked up a little bit. So what is that?
So there's two different membership programs, and you mentioned both the free one and the pay one.
Mm-hmm.
For the free one, you show up, you give them your phone number, and then they track your buying habits and they sell your metadata. Selling customers metadata is like 5.5 or 6% of the revenue right now.
Mm-hmm.
You can go a bit deeper. You can pay a yearly rate. It used to be $30. I think they recently upped it to 35. And you can sign up for basically like a Costco style deal where you pay an annual fee and then you get access to even deeper discounts. And this produces extremely sticky revenue where once somebody signs up for this, they're basically unlikely to go shop anywhere else unless they have to, like they're on vacation or they're out of town. I know several people who have Costco memberships and they drive right past Walmarts to get to Costco's.
Yep.
Yeah,
Yeah.
and that's a big part. Yeah, that's a big part of what I'm seeing here is really strong brand loyalty, and the value is there that they're willing to pay to get access to the deeper discounts. And there are people up in Canada that only shop at Canna Cabana because of the deals, because the deals are so good.
And roughly how much cheaper is it?
The last time I checked, just plain signing up for the free discount program was around a 20% discount, and then signing up for the elite program where you pay for it, it's closer to about 35% on select items. It's only about 15% of the products that they sell on the shelves have access to the ultra deep discounts. but their target is around 20 to 30% of what's available on the shelves when you step into a store. There's going to be a normal price, like competitor's price. If you don't sign up, then there's going to be a discount price, and then there's going to be an elite price. And for those for those consumers who are willing to pay the annual fee, they get their choice of the elite pricing. They get to pay, 65% of whatever market rate is for, cannabis and flower and concentrates and glassware and stuff like that. And so those customers, they interact at a lower revenue but a higher EBITDA than a normal customer, because the annual fee, that's just pure profit.
Exactly.
It takes what, a few pennies to process the paperwork on that. Yeah, that's basically just pure profit.
And it's $35 a year?
Right now, yeah. Last year it was 30. I want to say a few months ago they upped it to 35, and the CEO has talked about how as they get closer into that 20 to 30% range and they have a larger selection of offerings available, that they will move the annual fee up toward $50 to $60. And I suspect that'll take, like a year or two, maybe 3 or something like that. But for that branch of the business to be mature enough for them to start pricing it out at a full rate.
I see. Yeah. And that would be interesting to kind of observe how the consumer behaves with those price increases. Because one investment I have, you might have heard of it, called Coupang.
Okay.
They recently increased their prices, and then the stock rallied a lot because what they observed was the consumer, the subscriber, for their version of like Amazon Prime, essentially for Coupang, they didn't change. They didn't switch, which showed they had pricing power. And so if High Tide proves to the market that they also have pricing power in that category, I think the market's going to react really favorably. Which, by the way, we have the earnings report just around the corner, correct?
Yeah,
So,
it's like 2 weeks away. I think you said you were going to release this in about 3 weeks, so this should
yeah.
come out about a week afterwards.
So we'll see. It's either going to moon or crater. We'll see.
Well,
And that'll be a
so,
buying opportunity potentially.
yeah, the share price has a history of rocketing up into earnings and then falling for like a week or two after earnings, sort of regardless of what the earnings say. And so there's a conspiracy theory that this is their competitors. Some of their competitors are on the verge of bankruptcy. Some of them have extremely deep pockets. And there's a lot of rumors that the share price on High Tide is being manipulated by competitors who are trying to kill the momentum of any rally. And there's the stock market is full of conspiracy theories, so it's hard to say whether this one is that believable, but it sure does have a history of rising into earnings and then crashing for like a week afterwards.
Okay. And then in that case, I mean, well, we'll talk about the other way of sort of playing the trade that most of the club members all know. But when this goes public, it's going to be an interesting conversation to have. And then we can talk about it a little bit more. But going back to the business real quick. So they do wholesaling, right? Or they
Mhm.
purchase it on the wholesale market. So they're not exposed, right, to the price of the product
Correct.
going up or down. They're just, let's buy it here and then
Yeah.
boom, sell it to you. Buy it here, boom, sell it to you. So if it goes up, revenues will go up, but the profit margin should remain the same,
Yeah.
right? And then if prices go down, revenue should go down, but again, profit margin should remain the same.
Yeah. The last time I explained this to you, like when I gave you the pitch the first time, I told you that they are not exposed to the risk of production.
Mhm.
Where most of the producers up in Canada, they're busy fighting a price war, and it's a race to the gutter because the product has an expiry date. After 12 months, the Canadian government makes you destroy it. So somewhere around 9 or 10 months, they get real desperate to offload old product, and they all start undercutting each other. And fast forward 5 years of this undercutting each other, and the price of wholesale cannabis is just way down in the gutter. And this business model does not care what the price is. It really doesn't. As long as they're able to continually buy wholesale and then turn around and flip it at a pretty quick inventory turnover rate, they won't care. It does not matter if the price keeps tanking to below the cost of production. This company is not exposed to that risk.
And then so unlike some of these other competitors, the ones that people are really famous for talking about, like the Tilrays etc. Those guys, they're exposed, and that's what people have. So like, let me just talk about the scarring that a lot of investors have with this. Myself, I didn't participate ever, so I didn't have that scarring. That actually maybe is why I gave this one a chance. But I've talked to some people that they're really scarred from the bad investments they've made in 2021, 2022 in this space. I mean, there's people I know. Well, we can probably talk about that. Weed maps. I don't know if you've heard of weed maps, which I didn't really. Let's talk about that. What is weed maps, and why is that? Why did that fail?
So my impression is that they have to do with online like commercialization and advertising more than an actual like cannabis company. And I've always avoided them because I'm after tangible business models, and it's hard for me to evaluate like most tech companies and stuff like that because they have this intangibility about them. So I was never actually attracted to weed maps.
Yeah, so because they don't really deal with the actual underlying product, right? Uh, Now, then there's other businesses that people kind of point to, which I also find, I mean, to some extent, it's like a little bit weird because they are all acting like a financing arm. There's the real estate, like Innovation Properties, and another one that I always forget their name. New Lake Capital Partners. That's the one. Which New Lake is more interesting, but we won't get into New Lake maybe after we're done with High Tide if you want to talk about them because they have no debt and they're REIT with no
Okay.
debt, and
Okay.
they own all these properties.
Yeah, IIPR is also basically a REIT. I don't know if they have debt or not, but I know that they hand out loans to cannabis producers,
Yeah,
and they're in a situation where, for as long as safe banking stays not passed, IIPR stands to both have the REIT portion of their business and the loan sharking portion of their business, where they're able to hand out loans at these aggressive rates.
yes. And that's the part maybe I have sometimes like a bit of I don't know, squeamishness from that for a REIT to get that involved with their tenants as also kind of being that financing arm. But going back to High Tide, right? In
Sure.
Canada, we have I want you to repeat for me the part where you said Canada has a rule in place that after a certain amount of time you have to burn it.
Yeah, after 12 months, you have to either turn it into concentrate or destroy it. You're not allowed to sell 13-month-old cannabis to consumers.
And so that might cause, or that is causing at least the wholesale market to just be, you got to get rid of that inventory.
Yeah, yeah.
And that's
Uh,
good for High Tide.
And yeah, it's very good for high tide. A big part of the problem has to do with incentives. So if you're a grower and you want to grow revenue for your own personal company, the only real answer to that is to produce more. So you have to give yourself the availability of selling more. The only way to do that is to produce more. So every grower up in Canada has this stance where it's like, well, our board and our shareholders want us to grow revenue. Well, how are we going to do that? Well, we're going to grow a little more than what we can sell. And then that you faced with this problem, it's like, well, what do you do with this extra like 15 or 20% that you grew that you were unable to sell? Well, you dump it onto the market. You undercut everyone else just to hurry up and sell it for a small loss or something, just to not eat the large loss. And this is causing I've described it as a knife fight in the gutter where all of these companies are they're all hemorrhaging money. It's very hard to find a profitable Canadian cannabis company. They're all hemorrhaging money left, right, and center, just trying to undercut each other on the price of cannabis. And this company, High Tide, doesn't care. They're happy to pick up your wholesale cannabis and then turn around and sell it like 3 weeks later before the expiration hits.
And so just to emphasize this point one last time, right? For anyone listening and hasn't gotten this, this is not a producer of the
Correct.
product.
Yeah.
They just sell the product. So irrespective of where the price goes, up, down, sideways, they're okay.
Yep.
And due to an addition in Canada, some additional requirements about the produce after a certain amount of time, then you might have producers that become a little bit more desperate. But again, it's not really tied to the price.
Correct.
So even if they like underproduce a little bit less than last year, that the price of cannabis goes up, revenues would go up, but profit margins remain the same. It's a retailer, so we have to go into that retail mindset, correct?
Yeah. With many commodities, like say for example, coffee, there's a good reason that Starbucks doesn't grow the coffee bean, and
Mhm.
with dairy, most like cheese and yogurt makers, they don't also have cows. There's a reason why most commodities are separated from the the person producing it is almost never the person selling it to end use customers. And this is just another one of those cases where most of the rest of the industry has vertically integrated production, and that comes with a huge overhead. You have to have distribution facilities, you have to have packaging facilities, all that stuff. And that then you can finally set up a retail outlet. You have to have a huge, big, clunky, heavy, slow to move, slow to adapt business model to be vertically integrated all the way. And most other commodities have shifted away from that. You want adaptability and flexibility with your company, and so you really kind of just specialize in one thing. You don't try to own every piece of the chain all the way from the dirt to the end use customer. That doesn't make a whole lot of sense. So I'm also seeing this as sort of like a typical specialty retailer, like Starbucks, Tim Hortons, Dunkin' Donuts, stuff like that. I'm not seeing this as a vertically integrated producer, and I doubt they ever will become a vertically integrated producer, except possibly when they go to shift into the United States. There are some states that require that you produce it, or at the very minimum, require that you have a chain of custody from production all the way to the end use customer. And so in some states in the US, High Tide might actually have to set up their own grow ops. But at the way it stands right now, they're generating pretty significant revenue off of an extremely light asset system where they're leasing out these really small stores. I think they're like 600 or 800 square foot on average. In fact, can you bring up a picture of the inside of the stores? Go to Google, type in Canna Cabana, just do an image search.
Yeah, I'll do another tab.
Yeah, whatever. It's when you step into one of these stores, not only are they kind of small, they're kind of high end. Like they look kind of like a jewelry store, where when you step in as a consumer, you are faced with a large menagerie of buying opportunities there for you. A whole bunch of eye candy for, oh, I want this, it's pretty. I want that, it's pretty. This looks tasty. That looks, all that stuff. And you kind of get this high end feel with this discount model. It's a sort of a very happy paradoxical coupling where the customer, when they walk in there and they're a regular customer, they know that the value that they get is going to be higher than the price that they pay. And there's this sort of like this subconscious thing that gets reinforced every time you step back into one of these stores. When you step into a jewelry store, you know you're going to get ripped off.
Yeah.
When you step into one of these stores, you know you're going to get not ripped off. You're going to get a good deal. It might not be the best deal ever. It might not be quite as good as the black market or whatever, but you're going to get a good deal.
And as far as the unit economics goes for the store, what's it look like from opening the store as far as costs go, and what's the how many years does it take to recover that cost?
So I don't have clear answers on that, but I can tell you a couple of things about this. It only cost them about 400,000 Canadian to open a new store. And the ramp up time for a store to actually reach maturity is like 6 to 9 months. And this is without advertising. This company does not rely on advertising to grow its revenue. So one of the things that I try as an investor, I try to avoid companies that have to rely on advertising to stay relevant. And this company, I think most of their advertising budget is just the sign on the store frontage. They don't do commercials. They don't have billboards. They don't need any of that. All they need is to open up a store, slap a sign out front, and then wait for people to come in and try it out. And then they'll go home and they'll tell their friends and family. And then they'll come in and they'll try it out, and they'll go home and they'll tell their friends and family. And this entire business model works off of word of mouth. And I really like that. It's very efficient. And it's because this only works because they're actually offering things that consumers want. Most businesses, when they're small like this, they're forced to hemorrhage a lot of money on advertising. And this company, their business model is inherently advertising light. And I really like that.
Well, that speaks volumes if you're not spending that much money on advertising, but you're still experiencing same-store sales growth and also just growth in general.
Yeah.
Every time you open up a new store, you get new customers and new signups.
Yeah.
I mean,
so to sort of hint around your question that I sort of danced around a little bit, if you look into their financials and you look at the capex for any one quarter, and then you look at the revenue growth that they experienced the following quarter, you sort of see this positive trend going on where they're not spending a whole lot of CapEx in order to capture additional revenue.
Okay. So they're not spending a whole lot of CapEx to capture additional revenue, because if we look at the investment in the store, yep. And then do we know, for example, right now, which I have some questions about profitability and share dilution. There's quite a bit on that. And I think that's kind of getting into, well, what are some of the perceived issues? Well, if I look at the stock, first of all, very ugly chart.
I think
It's
it's a
down 43.
beautiful chart.
You think it's a beautiful chart? A lot of people say it's an ugly chart, but that's good that you think it's a beautiful chart. So max, it's down 37%, down 42.6% on the 5-year. And then, I mean, down from over here, though, if we kind of just zoom in on the 1 year, it's up 100%. And yeah, that's about 102% from those relative lows. So what happened? If I pull up a chart on share count, I will see a lot of dilution. Why am I seeing that?
So let me first talk about why you're seeing the drop and then the huge spike and then the drop, and then I'll talk about dilution.
Okay.
So the industry has experienced two major rallies in the last several years. At the end of 2018, Canada legalized, and the entire industry went on a huge rally. And this company first IPO'd in 2019 during the downswing of that rally. So that's why you're seeing that first initial drop for the first year and a half of it existing there. Then in early 2021, the end of 2021 and early 2022, right after Biden got elected, the Democrats controlled both the House and the Senate. And the industry went on a whole nother rally because Biden had made some campaign promises about cannabis, and he controlled the White House, and then the Democrats also controlled the House and the Senate. And that caused hope and hype just took over, and the entire industry rallied super hard. Okay, so now I'm going to talk about the dilution. So this company, first off, let's start at the beginning, this will help explain why the dilution happened. Raj started with one store, 2 employees, and 48,000 Canadian dollars in 2009. By the time they IPO'd, he was up to 8 stores. He decided that if he was going to stay competitive, he was going to have to reach scale, and that if he was not going to be able to reach scale, he was going to end up eventually falling by the wayside, just like all these other retailers that are not big enough to throw the weight around. So he started a merger and acquisition campaign. And I think today we have 171 stores, and about 40% of them were paid for with shares. This company has a history of having market offerings that are not used the way that companies traditionally use market offerings. So they will, the board will approve a massive amount of dilutable shares. And then instead of just selling those shares into the market to raise cash, Raj will go talk to people who already have profitable stores that are in good locations with a good footprint, and he will just hand them shares for their store. If you already have the right size store and you're already in a good location and you're already making pretty reasonable money off of your retail operation, Raj will step in and be like, "I'll give you some shares for that store." And so this form of dilution is very non-traditional. They don't dump shares into the market to raise cash. They are purely buying additional revenue with it. So they'll come in, they'll buy your store, they'll slap a new name on the outside, they'll remodel the inside, they'll fill it with high tide oriented paraphernalia and stuff like that, all the name brand stuff, all the white label stuff. And then before you know it, it's a Canna Cabana. That's all it takes. They're just converting stores. So for most of 2021 and 2022, during that massive downtrend that he just clicked away from, this company was doubling its revenue every year. And at the same time it was doubling its revenue, its share count was going up by about 30% per year. So even that massive 2 years of dilution, that is not a horribly unattractive situation. If you're doubling revenue every year and the share count's only going up by about 30%, that's better than horrible. That's not ideal, obviously, but doubling revenue is pretty impressive. And most people would shy away from a company that's diluting that heavily, but I'm seeing this dilution go directly to the bottom line. It's going straight into revenue growth. And then at the beginning of 2023, Raj was all like, okay, we have finally reached critical mass. We have really high revenue. It's some of the highest in the country. we're going to shift gears and we're going to avoid hyper growth, and we're going to let the balance sheet and the income statement catch up to the business model. And then he spent the next 3 or 4 quarters, mostly all of 2023, slowing down growth. If you notice on the revenue, if you look at their quarterly revenue, there was a pretty significant drop off in the growth rate. And this was because they didn't want to have to spend a lot of capex or dilution on new stores. They wanted just to let the company move freely the way that it would move under normal conditions. And I mean under normal conditions as in they left hypergrowth mode. And the mere act of leaving hypergrowth mode has allowed their financials to catch up to the business model. So for me, I am always hunting for super competitive business models. I believe that they will eventually lead to strong financials, and that strong financials will eventually lead to elevated share prices. If the business model truly is strong, then you can afford to buy things that are cash flow negative. But this is not advisable. I don't think most people should do this. I think most people should avoid the type of investing that I do, because you have to actually be able to evaluate the competitiveness of a business model. If you convince yourself you're better at this than you really are, you stand to lose a lot of money. So the dilution sort of cut off at the Q4 of 2022. That's when the pace of dilution tanked, and it very much stabled out. And a little bit of the dilution's still been going on because they've been doing some select M&A, and they have done a little bit of stock-based compensation. But for the most part, for the last 4 or 5 quarters now, we have seen the company shift into sort of a lower, smoother gear where it's more nimble, it's generating a lot of cash, and it's paying its debt down. I think the last time we talked was right after the last quarterly report, and I was all like, yeah, they're paying their long-term debt off, but you were pointing out they still have some medium-term debt that doesn't show up on Seeking Alpha. And for me, I'd have to dig through the 10Ks to go find that. But I think they still have an open line of credit with a bank that they've only used part of it. And they definitely have a market offering, like a huge, like $100 million market offering that they're just basically not using, because they're not seeing those attractive M&A opportunities. But it's there available when they need it. That's the whole point of having a standing market offering open that you only ever use like half of. I think the last one before this, they only used about 25% of it on new stores. And that's actually one of the things that bears like to point out the most about this company. They're like, look at this huge market offering that's just ready to go. They're gonna dilute shareholders really hard and raise money, and that is not what this company does. They use those shares to acquire already attractive locations that are already generating significant revenue in this industry, in this sector. They're using their float. Their dilution is directly translating to high quality revenue that synergizes with the rest of the company.
Okay, and then I'm gonna put my bear cap on
Sure.
real quick and say, okay, revenue's fine and all. What about profits?
So I think net income is not actually a very good way to value whether or not an asset is attractive or not. I look at levered free cash flow. I think it's FIFO or something like that. There's 2 different terms for the same thing. So this company has grown its revenue so significantly that they're able to use depreciation as a pretty major factor on their income statements. And that does a lot to make it so they don't have to pay taxes. So ideally, and this is going to sound like heresy to some people, you want to find a company that can basically stay net income negative and cash flow positive like indefinitely if you want it to truly become a growth monster, because you want them to not have to pay any taxes at all. However, it looks like they're going to achieve positive net income sometime this year. If they didn't have the write down at the Q4 of 2023, they would have actually posted positive net income 2 quarters ago. Last quarter, they posted basically neutral net income. I know this upcoming quarter, Q2 of the Canadian cannabis industry, is traditionally a lower revenue quarter because not just for this company, for the whole sector, because of winter. Because people up there in Canada, they don't want to go out shopping and stuff in the middle of winter, so they end up just staying at home and buying just less things overall. So I wouldn't be that shocked if they also miss positive net income this upcoming quarter. I also wouldn't be shocked if they experienced their first revenue decline ever in the history of the company. That's another selling point. They've been publicly traded since 2019. They have never had a quarter where revenue went down, ever. That's how sticky this business model is. That's how much growth they've been experiencing.
I wanted to say one thing though about high tides accounting. So because I believe so in Canada, the acquisitions have to be depreciated, I think, all the way down by 2 years.
Oh, inside of 2 years. Oh, wow.
Yes, inside of 2 years. So that was when I was hunting for why the cash flow and profits were so different.
Yeah.
That's actually the reason. It's so the GAAP net income, or their version of GAAP net income, should start to be a lot more positive as that starts to roll off the balance sheet. Because since it's 2 years, I mean, everything they've ever acquired, which a lot of it was acquired in 2021, 2022, that's not going to, it's going to get to zero within a 2-year period. And so if cash flows are, still pretty high, and it's obviously coming from the earnings of the business, then we should, in theory, start to see a rapid rise in earnings, reportable earnings. So that should happen.
We've also been seeing non-gross margins expand a little. So gross margins is typically, I view it as a company's ability to overcharge customers.
Mm-hmm.
And all of the other margins, operating margin, EBITDA margin, cash flow margin, net income margin, I see all of those as measures of efficiency versus gross margin. And so this company has been slowly increasing its efficiency over the last 5 quarters. Some of that is due to Fastender. Are you familiar with the Fastender? It's just a digital kiosk where you can place your order ahead of time, and then you show up, and instead of waiting in line, you walk over to the Fastender, swipe a card or punch in a number, open up a door, and grab your purchase. So it means people have to spend less time in line. It means faster turnover. It means all of those things that retail businesses want. But it also means having to have one less employee on staff. And so their efficiency has been slowly increasing over the last few quarters. And I really like that as well.
Well, I wanted to point this out because I've had it on the screen for a little bit. Over the past 1 year, share count has only increased 3.91%.
Yeah.
So to your point of what you were saying earlier, that seems to have been a purposeful dilution.
Yeah.
And okay, so the bear argument of saying they have this offering that at any time could dilute, it's not dilute for dilution's sake. It's not to raise cash, et cetera, and just have cash. It's there to, we need to expand, which I'm going to get to this question about Germany here in a second, but we need to expand. Do we use debt or do we use shares? Arguably, if you, depending on how you feel about it, well, debt is more risky, but shares is more costly because you're going to be sharing with more people the profits at the end of the day. But it's a balancing act of risk versus cost. So Germany, let's talk about Germany.
Sure.
We have expansion opportunity in Germany, and I've listened to every High Tide CEO interview. He gave me the impression that High Tide thesis, the growth, there's still so much in Canada that they don't really need to go outside Canada. And that was something that I had a hard time kind of getting across some of the club members I had discussions with about this, because they would hear this and say, think they need United States, or they want United States.
Yeah, they want United States, but they don't need it. Yeah.
They don't need it.
Yeah.
And so that was something that, again, just the CEO and the management team, they've been really, and we're going to talk about the change in management team in just a second, actually, because that is also something that people have questions on. But the CEO is consistent with his messaging. We don't need the United States, but if the United States legalizes it, we'll be in there. Okay, before we go to Germany, why aren't they in the United States right now?
Because they're NASDAQ listed.
And why is that important?
Well, good luck finding a United States-based cannabis company that's on the NASDAQ or the New York Stock Exchange. They're all stuck on the OTC because the exchanges won't let them uplist because it's a Schedule 1 substance.
You want to know something even funnier? You know how IIPR is public?
Yeah.
Yep. Well, New Lake Capital Partners is complaining about that and issuing complaints about how they are not being allowed to list, and they're
Huh.
the exact same kind of business.
Yeah, that's funny. That is
Yeah.
funny.
So we can talk about New Lake as an opportunity, because I looked into them. They are everything IIPR is, but significantly cheaper and
Okay.
no debt. The only problem is they're not listed on an actual exchange. They're OTC only.
Well, if you have a long-term belief in that their success, go for it. I mean, IAPR is a strong business model, and I don't see them failing just because the industry that they support finally gets some help from the federal government. I think IAPR will do okay over the next decade or two. And if you find something that is even on sale for even cheaper and it has no debt, and the only
Even if
reason it's unloved is because it's on the OTC and it's not on a major exchange, then that's an opportunity right there.
it's significantly cheaper. We'll get to that, but
Sure, sure.
all right.
So Germany, I expect that Germany is going to be a huge growth opportunity. They have a much higher population than Canada. I believe Germans also will appreciate the jewelry store feel that comes with the discount model, because I think they're going to roll out the same business plan. Our stores are going to look pretty. They're going to be clean. When you step in, you're going to see a huge variety of things for you to buy. Your eyes are going to get like barraged with all of these pretty things that the company wants you to buy because they're all high margin. And you're going to come back to that store because the deals are there. And I also, like, since we're on this topic of dilution, I expect for the rapid expansion into both Germany and the US to be fueled by debt, cash, and dilution. I think they're going to employ all three. I wouldn't be surprised if we find ourselves in another doubling revenue, but increasing the float by 30% every year for a while. And I know a lot of people are scared of dilution, but when you're doubling revenue every year and you're only increasing the float by 30%, that's accretive. That is a far better situation than what you could be in, since the every share of dilution is going into instant revenue growth, right? Immediate revenue growth. It only takes a couple months to get the signage changed, to get the inside remodeled, and then bammo, you have another Canna Cabana. So Germany has a significantly higher population than Canada. It also has a lot more density, where one store can service a much larger customer base, and you can have even higher revenue per store than what's already going on up in Canada. The same with the United States. Opportunities will be uneven in the United States. Some states offer like basically unlimited permitting. So Colorado and California, it's so easy to get a permit there. I don't think there's a maximum in either state. So as soon as the U.S. opens up, I think Colorado and California are going to be some of the first places that high tide moves into. Some states, like say for example New York, it's really hard to get a permit in New York. This might change. This might be in the middle of changing, and I'm just not paying enough attention. But New York is cited as an example of a state that high tide will probably try to move into last, or at the very least, very slowly, because it's hard to get permits there. Back over to Germany. Germany is currently unrolling things in phases. They call the first phase Pillar One, and Pillar One basically lets you like consume it, produce it, and then you can also join these like hookah bar type places, like a hookah club, and you show up to the hookah club and you pay an annual fee and you get to consume it there at the hookah club. Pillar Two, they're going to allow small time retailers in. They're going to allow the high tides of the world to start setting up shop in Germany. And so I think the Germans are sort of like thinking about this as like a vape store. Like you walk into a vape store and they have all of these vaping paraphernalia all over the walls and everything. And they don't realize what high tide is going to do to their local businesses, because this business model is already very proven. It's bankruptcy inducing. It captures market share. Once those customers go in, they do not want to leave. They want to keep coming back to the Canna Cabana. I'm not sure if the company is going to maintain the Canna Cabana name. I think that their so they partnered up with a company called Sanity Group, which is Germany based, and they're helping them through all of the legal process and everything involved in the German expansion whenever it finally becomes available. And when they first started talking about Sanity Group, they released a name for what the high tide's going to open their stores at over in Germany, and I believe that at the time they had proposed that they're going to be named High Street. So over in Europe, the canna cabanas might all go by the name High Street. I don't think this is finalized yet, but this is what was reported like 6, 8, 9 months ago, right in there, when all this talk of Germany became real. Like it became super clear. Germany is definitely doing this. The question is, how long is it going to take them? How long will their bureaucracy take in order to actually get all these things passed? A big part of it has to do with campaign promises. They have a multi-party system over there, and the two parties that won the biggest share of the votes and thus has the largest control of their version of Congress, both of those parties ran on cannabis legalization. And so when the two largest parties in the country are both incentivized to make good on their campaign promises, it's super clear it's going to happen. But the question is when. I don't know how long. 6 months, a year, 2 years. At some point, High Tide will be allowed to expand into Germany.
And like you said, you're expecting them to use every tool in the toolbox to get that expansion going.
Yeah.
And then when you were saying, oh, it's accretive revenue, the bear in me, right, says like revenue is great. Is it cash flow positive every store that they produce?
I believe it probably takes about 9 months for any single store to become cash flow positive. Because I've heard the CEO mention that it takes like 6 to 9 months for a store to reach maturity, and that if they grow too, this is part of why I was talking about how they slowed down on the rapid growth to allow for the business model. To allow for the balance sheet and the income statement to catch up to the business model, because when they first opened these stores, all of the flat costs are still there. And so if it takes 6 to 9 months for a store to reach maturity, any single store, then it's probably cash flow negative for the first like 9 months of its existence as it grows this local base of consumers.
So that's the figure I was looking for. So that's how long it takes for the store to break even from a cash flow perspective, start being accretive. That's pretty fast, by the way. Yeah, that is for everyone listening. That's fast.
Yeah,
less than a year
with no advertising.
With no advertising, that's actually pretty fast.
Yeah.
And then, what is the average revenue per store? Do you know that?
I think it's 2.7 million.
That's what I had around there.
Yeah. And I read these quarterly reports like once every 4 months. So if my memory is wrong, you're welcome to correct me if you read something more recently.
No, you're fine. I mean, I saw that the competitors on average is like 1 million or less, and so they're over double. So that means that on those metrics that I was telling everyone earlier, when you're looking at a grocery store or anything that's like retail based, it's all about margins are one piece of the puzzle. You can look at margins and say, okay, one's better than the other. But then the second piece of the puzzle that's just as equally important is that turnover. So if you have low margins, but an extreme turnover, it makes up for it. And then so the totality, when you get down to like the nominal amount of revenue and income you're going to be making, you're going to be better off than if you have a higher margin but really low turnover.
Mm-hmm.
So if you're pulling through well over double the average in terms of just revenue, I mean, that at least just tells me you're moving more volume. Now, cash flows and profitability is a separate discussion. Clearly I have right in front of us the unlevered free cash flow for High Tide. And what I'm trying to show here is actually when I first accumulated shares, this was trading close to 10. It's moved up. It's now what, 250 million market cap. So it's not too far away from 10. We're not looking at a 30. So if I look at a business that's growing really fast, typically, and it's cash flow positive, and in this case, they're going to be inflecting on net income positive. But here, I would expect to see a pretty high multiple, but I see a low multiple.
Yeah.
And it's growing.
It's
fast.
It's still on sale for cheap.
Yes.
Yeah.
So now, like, the question then kind of asks itself there. It's like, why is it so cheap? Is it because it's a Canadian? Is it because it's cannabis, which I think is the answer, but I'm begging the question there.
That's the answer. The sentiment on the industry is super sour. And so many people have gotten burned from the previous two rallies because they bought in at the highs, and they bought during the hype and hope phase. And then they spent the last 3 years watching their investment fall by like, 60, 70, 80%. Or unfortunately, if you bought into like Tilray or Sundial, like 98% down. Like
Ooh,
huge downs. Yeah, go look at a 3 or
let's do
5 year
that.
chart for Sundial and you'll see what I'm talking about. It is atrocious what happened to those shareholders.
Is it SNDL?
SNDL, yeah.
I've never even heard of this one. I learn about a new one every day.
So, right around the time that I began my research into the industry in early 2021, this company diluted shareholders for $1.18 billion. Yeah, let that sink in. And that's that little spike. That's the little spike in early 2021. They then made a bunch of horrible decisions with that money. They loaned it out. They loaned a big chunk of it out to failing competitors. And then when those competitors eventually declared bankruptcy, they had to take on their assets. And bear in mind that these assets already drove their first owners out of business. So these are not high quality assets. In order to save the company, they bought a chain of liquor stores. The chain of liquor stores is actually the best investment Sundial has ever made. Everything
Is that
else has been just one piece of bad news after another. High Tide's main competitor, Nova Cannabis, they had a lot of debt, and then Sundial stepped in and took away all of their debt and bought a controlling share of Nova. So now
oh,
Sundial's
Lord.
CEO is on Nova's board, and he forced them to sign a really oppressive franchise agreement. So in an industry where every penny matters, Nova has to pay like 10 to 15% of their revenue from Sundial products as a franchise fee to Sundial. This is brutal. This is real bad for Nova. Nova eventually bucked that franchise agreement and said, "We can't do this. You're going to drive us into bankruptcy if you do this." So now they're busy working out some new deal that I'm pretty sure will be in Sundial's favor, because Sundial is this sort of like this big money hungry hulk of a business, and they have all this money still left over from 3 years ago when they diluted shareholders. They're not operationally profitable. If you look at their operating margins, it's been negative for years. And they keep on making poor investments. And this is an example of a company that they have a strong balance sheet. They're probably undervalued book value, but they have a horrible business model and they have negative operating margins. I just can't touch a company with
Huh.
negative operating margins. Yeah, I don't. That's not even cash flow margin. That's operating. That's before cash flow. That's before net income. Negative operating margins. And they have the good news is they have no debt, and their CEO has an IQ that's somewhere in the double digits. So he's not as dumb as he could be. I think he's done some horrible horrible decisions, but he certainly could have spent the money worse. But the long story here is if you were in this during the last peak, you're down like 98, 99%. And this is not the only story in the Canadian cannabis industry like this. You look at Aurora Cannabis, you look at Tilray, all of the big names that were huge meme stocks, like at the beginning of at the height of the rally in 2021, they're all down horribly. And yeah, Tilray. Look at Tilray on a yeah. Look at this. It was trading, $30 a share during the last rally. Now it's at $1.80. So when you show me that high tide chart and you're like, this looks scary, and I'm like, this looks beautiful. It's because I know to compare it to the rest of the sector, and compared to the rest of the sector, high tide went down not nearly as far because it has an actual strong business model, and the rest of its competitors, they basically don't. Of all of these shitcos, I know you like to call them that, Tilray probably has the best business model. And long term, like 10, 15 years from now, you are very likely going to be allowed to go to a sporting event and crack open a cannabis based beverage. You are still very unlikely to be able to light up a joint. And so Tilray has sort of cornered this cannabis-based beverage market. They still have horrible financials. I would not touch Tilray right now. But if their financials ever improve, their business model of all of the shitcos, their business model is the most attractive.
Of
Because
all the shit goes.
yes, because of this potential where they have sort of monopolized into beverages, and that has has potential. If their financials ever improve, I could theoretically one day buy Tilray, but their financials are horrible, and they keep on making promises to shareholders that they're unable to keep. That is another one of the things I really like about High Tide. The CEO likes to underpromise and overdeliver, and he mentions this all the time. Other shareholders talk about how much they love it. He will set a goal and meet the goal, and often when he sets a goal, he achieves beyond what he set. He doesn't just like cross the finish line; he crosses it in record time.
How much is his comp?
It's reasonable. I think the last time I looked it up, it was like 600K a year or something like that. That's not a number that I focus on a whole lot. How much the company pays him. I know that when they reached positive cash flow, they did a rather large amount of stock-based compensation compared to what they're used to. And so there is one quarter from a few quarters ago where the stock-based compensation was noticeably larger than normal. Do you have an actual accurate number for how much the company pays Raj Grover?
No, I do not have the accurate number off the top of my head, but I remember when I saw it, it was fairly reasonable. If not, I considered it low.
Yeah.
So
Well, he is the largest shareholder. So,
yeah.
and he's a founder owner. And so his incentives for the company doing well, they go past merely financial because he has tied his entire reputation to the success of this company. It's his baby, and he comes from a long line of entrepreneurs. And when he goes to like weddings and family events and stuff, this is what he brags about. This is what, he's all like showing up as uncles. They're all in import export business. That's how he got into this importing glassware. And so when he shows up to family events, this is what he brags about. And he needs this company to succeed because he has wrapped his entire persona around its success. So this is also why I don't like touching a company like Disney, because the current CEO of Disney was already wealthy before he became the CEO of Disney. So if Disney fails, Bob Iger doesn't really care. Like his entire fortune is wrapped up in not Disney. If High Tide fails, Raj Grover is going to care big time. I mean, this is something he has invested 15 years of his life building, and he's not just going to like let it die. And he's also not going to let it underperform. And so having the CEO's incentives aligned with yours is very good. It's one of the things I look for. Is not just the financial incentives, but the persona incentives, where the CEO, the founder CEO, he needs it to do well. Like if you look at everybody from Microsoft to Meta and all these companies that have founder CEOs, Tesla, although you can argue whether or not Elon was a founder, but all of these companies that have these like rock star founder CEOs, one of the reasons the company did so well is because the CEO's incentives were always aligned with shareholders over longer time frames, over shorter time frames, no matter what happens. I also really like the fact that Raj's wife owns a lot of shares. So picture this: every time he dilutes, he has to go home and explain it to his wife.
And wait, those shares for his wife, were they given by him?
So when they first went public, she used some of her own money outside of him to buy shares.
Oh, she bought shares.
Yeah. And I'm not entirely sure if that was right before the IPO or during the IPO, because the only reason I know this is because back in 2021, when I was researching the company, I found some sort of a document from pre-split. They did a reverse split in order to get uplisted. And I found a document from before then that said that she had like 6 million shares or something. Now this is before the reverse split. So her actual share count nowadays is significantly lower than what it used to be, just because they all got converted. But I really like that his incentives are not just to please shareholders; it's also to keep his wife happy. I really like that. It's hard for me to emphasize just how much I like, because I live by happy wife, happy life. I don't know if you're married or whatever, but a significant chunk of your audience is going to know exactly what I'm talking about. Imagine making a poor decision at work and having to come home and explain it to your wife, but she's a shareholder. Like that has this extra layer of responsibility.
Yeah, I can see that happening. And okay, so I was looking through High Tide's financials real quick. I just used the data aggregator in front of me because I was trying to find it quickly, but the 6Ks, they don't label them on CEO. So it's like, whatever. So the part that they have no long-term debt anymore.
Okay.
That's gone. What they only have is just all of that long-term debt has actually just transferred over, it looks like, onto the current portion slash short-term borrowings. So they have about $20 million, which for their size is like, it's nothing.
Yeah.
So you really have, what I'm looking at here is a business that isn't very leveraged, isn't diluting anymore. So that is, well, there's other companies that we've been kind of negative on it inside the club and trying to figure out ways to profit from that negativity. But it almost looks like the complete opposite, at least from that standpoint. From like a relative size perspective, because some of these companies are actually similarly sized to High Tide over here. But High Tide, we're seeing a reduction in the use of debt, reduction in the use of shares. So that kind of tells me, without looking further at the cash flows from operations, that this company must be producing cash. Otherwise, So I like the positioning because we have about $21 million in cash, which actually, funny enough, coincides and covers the short-term borrowings if needed as they mature. And if they have a revolver agreement, I have to look into the details of like how that's being handled, if they have to pay it back, or if they can just hold and just pay interest only, or if they have another debt agreement on the horizon. Because since it is legalized in Canada, they have access to banking.
Oh yeah, yeah.
Unlike in the United States. So I really like it. I like the expansion into Germany. I like, again, what the CEO had to say about expanding in the United States. I know that, do they sell paraphernalia in the United States?
Yes, yeah. Last time I checked, they had about 3 million U.S. customers, and that are just buying glassware, and I assume most of those are head shops and dispensaries and stuff here in the
Oh,
U.S.
okay.
that are using them to purchase their glassware to fill the shelves.
I have a stock for you that I want to ask you about. I've already asked it to you a while ago now, and
Okay.
it's one of the longs from a favored short seller character, Mark
Okay.
Cahotes.
Okay.
I've heard of him.
I
So
don't
he
know him.
likes he's a
Ah,
character, I'll say that, but he likes this company, Glass House
okay.
Brands. And I wanted to gauge you on how you feel about Glass House Brands. Do you feel positive, negative about them, neutral? And then in relation to High Tide, when High Tide starts to try in the future expand into the United States, because for audience's context, we have audience members from all around the world. The California market, which is where Glass House is from, is basically, I think, actually a bigger market than Canada,
Yeah.
which is crazy.
It also has the same ultra high competition. The Colorado market, the California market, and the Canadian market are the three most mature markets in the world.
Which
And
one? Sorry, one more time. It's
Colorado, California, and Canada,
okay, Colorado,
the
California.
three most mature. And I think Canada
Wait,
is the most mature.
CCC.
Yeah. Yeah.
Coincidence.
So so Glass House has. I have mostly positive things to say about Glass House. Glass House is an attractive business model because they are not using like electrified lighting to grow. They just have these really large, really efficient greenhouses, and they're in a fairly sunny part of California. And so their cost to produce is lower than most of the rest of the country. And when or if I'm sure it's a when, it's not an if, but when the federal government eventually allows interstate commerce for this commodity, Glasshouse is extremely well positioned to capitalize on that, where they're going to be able to ship, and they're going to be able to undercut Illinois, New York, Ohio, Florida. They're going to be able to ship their already cheaper cannabis that they're used to producing for the California consumer all the way across the country. Okay. Also, their cost of expansion is not super low because how expensive is it to build another greenhouse? They just put another 8 or 10 million into it. Bam, they have another greenhouse. Huge greenhouse, lots of square footage available. They're growing very cheaply. Okay, so that's the positive things about Glass House. The negative that I have heard is that they are already selling to intermediaries that are breaking federal law, where they're selling it to some other company in California. That company in California is breaking federal law, shipping it to New York. And so Glasshouse is currently producing a portion of their revenue is probably shouldn't be happening, was the short answer. So it's possible they'll get some kind of blowback for this. I don't really know if there can be like legally held accountable for selling it to a second party who then moves on and breaks federal laws with it. But I wouldn't touch Glasshouse until that threat goes away. However, I think the time for me to buy Glasshouse is the day I hear that the federal government is allowing interstate commerce, and that might happen immediately after Schedule 3. We're currently experiencing the rescheduling, and this is a long, slow, bureaucratic process. We're basically waiting on the DEA to finish their end of the deal. So they made the announcement, 3 weeks ago, 4 weeks ago, right in there. And so we're in the 60-day period where you can comment to the DEA, and you can let the DEA know, your opinion on it. You can ask them questions, all of this stuff. And so when that is up, I'm not really sure exactly what has to happen after that, but there's another multi-day period of waiting, and then it can finally get imposed into law. And the way it looks right now, it'll probably be October before Schedule 3 finally happens. I've heard this from a couple different people. I'm not a legal expert. I'm definitely not a bureaucratic expert on how long all this is going to take. But I've heard more recently, the last couple weeks, I'm hearing that because of when the DEA started the process, it should happen around October. So it is possible that from like November on, or maybe there'll be like an extra 30 days or whatever. So maybe December on or whatever. Glasshouse might actually be able to legally export to Florida and New York and Ohio and Illinois and all these places where the price of cannabis is higher. And so that has an opportunity to not just grant them additional revenue, but it also has the opportunity to expand their margins, where instead of only selling to California clientele, they're able to move it to directly, without the intermediary, directly to places where it costs more.
And real quick, I'm looking at the audience. I think we need to do a kind of like a circle back to this. So Moxie comes in and says there's no mode in paraphernalia. I think she's talking about high tide sales.
Yeah.
And then also says the following. I think this is mainly probably about Glasshouse. And I'm not touching any pot stocks until it's federally legalized in the United States. So I think just to reiterate with high tide, right, in Canada, they don't do business in the United States. They do business in a legal market, correct?
Yes.
And they only do a portion of their business, which I assume is actually a small portion of selling paraphernalia, but they sell it to the stores. They don't sell it to the customers,
Correct.
the people.
Correct. Well, I think you as an individual could right now just order off their website.
On the website, sure. But if I go to a store, that's the majority of their.
Yes.
They have 3 million customers, but a good portion of that is.
Yeah. Their brick and mortar operations is something like 89 or 90% of their total revenue. Selling the metadata from their customers is another 5 or 6%. And so that leaves the remaining 4 to 5% right in there as the wholesale glassware market in the US. Yeah, that's not a whole lot now, but this means that they already have contact with a bunch of United States-based stores, and they already have a relationship with them. And some of these relationships, I'm sure, are just purely transactional. But some of them, it might be like, hey, Jim, how's it going? You want to sell me your store that's only 600 to 800 square feet and in a prime location? So I wouldn't be shocked if some of High Tide's present-day customers end up becoming future store locations that the company just reaches out to and sees, are you interested in selling? Just because we took a look at your square footage, we took a look at where you're at. Maybe you're right in between like a pizza shop and a bar, or you're right next to an anchor store, like one of the big box stores or something like that. And if they think that you're in an attractive location, they might reach out to you as soon as they're legally incentivized to expand in the U.S. They already have a Rolodex full of people that they can call.
But just to reiterate, they don't need to expand in the United States.
No, they don't need to expand in the U.S. They have their goal is to reach 300 stores in Canada, And their last goal was 150, and they blew right past there and just kept opening more stores. So I don't think 300 is an actual hard wall limit. I think that's just Raj's next goal. Get to 300 stores. That's a nice round number.
How
It'll
many are
produce
they at now?
171 or 172, right in there. See, I'm always like 3 stores behind. I think the last earnings call, it was at 165-ish, and they've opened 6 or 7 stores so far this quarter. And they're high quality stores too. The ones they've been opening recently are in Mississauga, which is one of the more expensive places to live. It's a suburb of Toronto. And the city has been previously preventing cannabis retailers from opening up until more recently, when companies like HITI approached the city council and they're like, hey, you realize by not letting us in, you still have a thriving black market. And eventually the city council was like, okay, fine, we'll allow some permits. And so High Tide is opening 5 or 6 stores in Mississauga, these should be fairly high revenue per store, because it's a fairly dense area, and it's not run down. It's fairly well to do. You got a lot of potential customers in the area, and they have money to spend.
I have a question, because I don't know exactly the nuances here, because believe it or not, I don't engage in the black market. But why would someone choose to go to the store versus the black market? Like, what do I get as a customer?
Well, you know that when you buy something in a store, that it's probably not full of fentanyl. That's definitely a factor.
That might convince me. Okay.
Yeah.
Getting
There's
better.
also pesticides. You have to watch out about consuming pesticides. And if you're buying from some small time grower who's consuming it themselves, then they're probably taking the extra effort to make sure that whatever they produce is actually fit for consumption. But if
I,
you're, yeah,
I, I think the Canadians are like, why did he pronounce Mississauga like that?
oh, I'm sure I butchered it. I'm sure I butchered it. Yeah, Mississauga. I don't. Yeah, I'm sorry. I'm sure it's horrible. Yeah. There's also the knowledge that that the money you're spending isn't helping to fund crime, or cartels or anything like that. Although I would imagine a majority of the black market in both the U.S. and Canada is not attached to organized crime. You have to understand that a small percentage of it is, and anytime you buy off the black market, you have that ethical thing where you're probably contributing to the making the problem worse.
Okay. So all good reasons. You had me at the fentanyl thing. So
Yeah.
but all good reasons to probably just go to High Tide. Okay, so when I think about High Tide and like glass house brands, and I'm trying to do like war games in my head, like really
Yeah.
early war games. Um, it gets legalized in the United States. We have interstate transactions allowed for this product. High Tide tries to come in. Well, now we have to deal state by state. I don't know if California requires you to be a grower simultaneously.
I don't know either.
So let's ignore that for just a second, because I know that Glasshouse Brands has their own stores, but they participate in the wholesale market as well.
Yes.
So High Tide could just do business with
Yep.
Glasshouse, and it's just the same business model as it was in Canada, where it doesn't matter. It's all about getting the customer in the door, turning over that inventory. Because what's the problem? Like, walk me through, why should I be weary about a grower? Because the thing is, and I think this is what everyone's scarred with, or everyone I talk to, they're all scarred with, and all the companies they mention was, they're all growers. And I was talking to one of the members who he really liked this pitch, but the reason why I liked it is because he said, I'm quoting him, it's a goddamn retailer. I think, to quote Charlie Munger, right? It's just a goddamn retailer. So why should I be weary of investing in a grower rather than just the retailer?
So I think the situation that already happened up in Canada and is still playing out has yet to actually start here in the US, where companies are financially incentivized to undercut each other. And so for example, the growers in Oregon are currently selling it at a much cheaper price than, say, Illinois. And as soon as the federal government says, okay, fine, you can sell your stuff straight to Illinois, every grower in Oregon is going to ramp up production, and try to capture additional market share in other markets, in what used to be cut off markets, but are now open to them. And I think the exact same price war that already is playing out in Canada is going to play out here. And even a company like Glasshouse Brands, who has a very low cost of production, is still going to have to worry because their margins are going to crush, because everything is going to collapse as the wholesale price of cannabis collapses. And if you're a grower, you are also heavily like what happens to you is heavily determined based off of what the rest of the growers do. And everybody is incentivized to grow more. As soon as interstate production happens and interstate commerce is allowed, every producer in the United States is going to tell their shareholders, we're going to grow more. I guarantee that's exactly what's going to happen. That's what already happened up in Canada. That's what's going to happen here in the US. As soon as it makes sense for them to do that, they're going to say, we're going to grow revenue. We're going to find new markets, all of this stuff. And when everybody is doing exactly the same thing, it's really bad. So basically, like the comment down there, there's no moat in glassware. Well, there's definitely no moat in growing it. It's comparable to beer or wine, where some people will always chase after the cheapest price, and some people will always chase after, like, say, specific flavors. But enough people know that if the market gets flooded with wine or flooded with beer and they just plain can't sell it, then you can expect the price of wine and the price of beer to go down. So I'm convinced that as the U.S. market finally is allowed to compete with each other, we're going to see a maturity phase where there's going to be a lot of bankruptcy, there's going to be a lot of consolidation, there's going to be a lot of mergers and acquisitions, and we're going to see the price of wholesale cannabis tank significantly. And I wouldn't be shocked if it ends up like 3 or 4 or 5 years from now, if it ends up pretty comparable to what it's already priced at in Canada now.
So, and that's what I was thinking, right, with Glasshouse. So I'm looking at Glasshouse, and I think the moment this thing gets, allowed, these guys are going to go nuts. Just like you said they're going to go nuts. And so when they go nuts, maybe the others go nuts too, because they all don't want to lose market share. Perfect chaotic environment for someone like a HITI to come in, who's like, well, I don't care which one of you grows it. You guys can all fight. I'm coming in here and I'm trying to secure a relationship with the customer. I'm trying to develop that or get that subscription, and then I'll wholesale buy from all of you, and I'll focus on just being a retailer. And then all these other guys are focused on just killing each other.
High Tide is playing a different game. They're in the same industry, but they're playing a very different game.
Yeah, and I think that's at the end of the day why when you originally talked to me about this idea, I was hesitant because, just like, okay, this industry, don't really like it. But then as you kind of got around to explaining it to me, I started to end up liking it. So much so that, again, repeat to everyone, I own shares. And I view it simply as like how I would view any other retailer I look at in the past. A grocery store chain, general retailer, it's the same kind of analysis that you have to do. I just see it also as having additional discounts relative to what it's growing at because of what it's in. And I think investors or the market participants are lumping it in with something that maybe is a little unfair. Now, with that detail about its profitability, I found that when I was looking into Canadian rules of how they have to account for things, that we should start to see if they don't acquire more or too much more in the next couple of years, what you should in theory start to see with the bottom line is it start to slowly shoot up, because all that starts to roll off. And let me check to see if I can quickly find how much they have left, because it's basically whatever's left on goodwill. So they have 56 million left.
Okay. Of depreciation that they get to bank?
Left to go.
Okay.
Yes.
I hope they spread that out appropriately so that they don't have to pay taxes for as long as possible.
Well, with the taxes, I mean, I don't know what the system in Canada for their tax accounting will be, but that's going to have its own like depreciation schedule, et cetera. But I think with like the goodwill write down, at least it will give us more clarity. If people are only paying attention to the net income, they're going to miss out on the story of unfolding, which is actually showing up in the cash flows, with the added nuance of why that's happening. So if I go to like the income statement, and I kind of check down as to where the depreciation expenses. So EBIT including unusual items. Well, this is a data aggregator, so it's. But yeah, right here, depreciation, amortization, and I'm making sure income statement. Yeah, it was 23 million.
Yeah.
And I'm on annual 23 million. So they still have about 2 more years of that amount. But if operations continue to grow, then we'll start to see that expand. And then as soon as that gets fully written down, hey, we're gonna then it's gonna start to show up on that bottom line. But,
yeah. And if Germany happens soon enough, that period might not happen where they're unable to depreciate their way out of taxes, and they're forced. Some people want positive net income, but I'm after a growth story. They're forced to post positive net income and pay taxes. A lot of it depends on how long they have to wait until they can expand into either the U.S. or Germany.
Yeah. So I think with this company, I'll guess we'll talk about the way that I also got additional exposure that I was hinting to in the beginning. So I already told you this, you already know, and then the club members, you guys watching, you guys already know this, but when this goes public, this will be kind of discussing an interesting opportunity that arose. And again, I'm not claiming discovery of this. That's the part about the investing club that's so cool, is multiple eyes and ears on everything. And something that was interesting that was occurring around the price point where High Tide was at about $2.30, $2.30, $2.20. There was a spike of volatility because there was one day that it moved up quite a bit to the downside. And at that moment in time, if you had gone into the options market, you would have seen that the premiums that you would have been paid on the $2.50 strike for October was quite significant. To give everyone exact figures for every contract, I got an execution price. I think the guy who originally showed this to me, he got even better. He got 90 cents. I got 80 cents. I thought I did really good. He got 90 cents.
Yeah.
So yeah, you do the math. Everyone who's following along, you just take the strike price minus the what I just stated as the price that he sold it at, and then that's your break even. So it's the equivalent of basically buying the shares at sub $2 when it was above $2. And then I don't know what they did with the premium, but something you could have done with the premium, which is interesting, is you do that exchange, and then you, depending on how many more shares you wanted to accumulate, then you go long the common, and then anything in between. Even if it doesn't get down to, or sorry, if it doesn't get up to $2.50, you still come out on top. So if any kind of variation between right now, it looks like if things sort of maintain where they are at by October of this year, those puts should expire worthless. You'll still have your premium. And then if you wanted to accumulate more shares, you should have been doing that all along the way, within whatever everyone's target goal is. So yeah, that's one way of doing it with this one. So yeah, I think with longer term, I'm going to ask you this question about High Tide. It's a fun question. There's no right answer. How big do you see them getting?
Oh, eventually?
Yeah.
So they're probably going to become either the Tim Hortons or the Starbucks of their industry, and I'm not sure how big the industry as a whole is going to get, but I see that in long term, they're going to end up becoming a top 5 company globally, where they are going to be one of the names that everybody recognizes.
Are you saying top 5 of all companies or top 5 of the product?
Of the industry.
Of the industry. Okay.
Yeah,
Some people hear that, they're like, wait.
No. They're not going to be NVIDIA or anything like that. Yeah, not anytime soon. Within their industry, they're going to become a top 5 player globally. But I'm not sure how big the industry as a whole is going to grow over the next, 20, 30, 40 years. But this business model has the potential to, it's not sort of a winner take all situation, but it might become more of a winner takes most.
Yeah. So actually, I think Starbucks is fairly appropriate because people don't know this, that coffee is actually extremely fragmented. And Starbucks, if I actually look up a simple Google search, Starbucks market share in coffee industry, I'm just going to take it as his word. And actually, wow, never mind. Scratch that. If this becomes a Starbucks, is that real?
Yeah. What's the percentage?
It says roughly 41%. I don't know how
Wow.
true that is. There's no way. Is it
The,
really 41? Or
the
I'm seeing two figures. What's this 21? 52 week ended roughly 41%. Yeah. Well, I don't know if Statista is lying to me or not, but it says it's the 40. Oh, no. Ready to drink coffee.
okay.
What is that coffee or is that just
Yeah.
the actual?
Like you don't buy it in powder form at a grocery store. You buy it ready to drink, like through a convenience store or a drive-through.
Okay, so is that including the heck? Okay, so report notes that Starbucks maintains a whopping 40% share of the market in terms of number of outlets. Okay, so no, if you think this 40% share of cannabis would be the assumption then.
Yeah. Well,
As a
a lot of their revenue, there'll be overlap with the growers. So every time High Tide makes a sale, not only does High Tide get to log that as, hey, that's our revenue, but the producer gets to also log that and say, hey, that's our revenue. And so that's how you end up with companies like Tilray claiming that they have the highest revenue in Canada, when in reality, it's the retailer that is selling a big chunk of their products has the highest revenue.
I'm still in shock that Starbucks has 40% market share. Like I thought,
Yeah.
local places would have it. Well, this is strange. It doesn't seem like that would be a correct statistic because then it's also quoting that Chipotle has 11%.
That seems a little high.
Anyways, unknown amount. If someone else finds it, put it in chat and then I'll bring it up because here we go. All right. I believe this more. This is more believable. So I'm using Jungle Scout Cobalt website and it has a chart here. I'll share my screen.
11%. Okay.
So this is more how I would think of Starbucks as far as like market share goes. I would not have suspected 40% market share. I'd be like,
Yeah. So High Tide already has 10% market share up in Canada. It's
10%.
already at about 10%, and at 10%, they're putting enough stress on the rest of the industry that competitors are going bankrupt. As they go past 15 and approach 20 and 25% market share, it's going to become basically impossible to compete against them because their opportunities are going to become exponential. Like as competitors go out of business, they will be able to swoop in and pick up the best stores with the best locations. And then the amount of pressure that they as an individual put on the wholesale price of cannabis will only grow larger and larger. They'll be able to put outsized pressure on the downward motion of the cannabis because it's very difficult to talk someone into paying more for something that they can just drive an extra couple blocks and go to a Canna Cabana and get for cheaper. So as their market share grows, so will the pressure that they put on their competitors. And they're already at 10%. They're when they were doubling revenue doubling revenue every year, they were gaining market share at about 1% per quarter.
So they're expanding quite heavily into their own market, which is what we were saying in the beginning, which was they don't have to expand into Germany, they don't have to expand in the United States. If what would you think would be the long-term market share capture in just Canada? Say United States never happens, Germany never happens.
Sure, maybe 25 or 30%, right in there, and it could be even higher. But a lot of that question comes down to what percentage of consumers are actually interested in a discount store versus a convenience store.
Yeah.
I can't really answer that question, but a certain percentage will just always go to the closest store. It doesn't matter what the price is. And a certain percentage will always drive the extra distance to get to the better deals.
And that's actually really reminiscent of, for example, like the gas station business. So the gas station business is like, it's actually very fragmented. There are a few big players, but there's also a huge chunk of the market that's just a lot of mom and pops that still exist. And sometimes people forget that is the case. So I mean, in High Tide, eventually I would expect that market in Canada to mature. if High Tide is number one, that's a really good position to be in. At that point, they maybe focus on like more larger scale M&A, start acquiring, one of their smaller-ish competitors, maybe not their direct one. Right now, what is their direct competitor? Like, if I think the number one competitor of High Tide, who am I looking at?
Nova Cannabis.
Nova Cannabis.
Yeah,
Okay.
and
And
they're
that's the one that's owned by.
Sundial. Yeah.
Oh, so they're gonna get
And
drafted.
they're getting franchised into irrelevancy.
Oh, okay. And then after them, is there anyone of relevance?
Fire and Flower already went bankrupt. That was their other major competitor, Fire and Flower. They had a bunch of stores, and their model was the opposite of discount. They were trying to sell people on this idea that you
Premium.
want to pay more because our stores are luxurious and they're huge stores. And they got crushed by their own lease agreements. Is the short answer. They bit off more than they could chew, and they misjudged what the consumer was actually after. And Fire and Flower went out of business last summer.
Anyone else under that?
Kind of not really. It's a whole slew of ma and pa's that are independently owned, and they're all really pissed off about some corporate player coming in and stealing their market share. Every time Canna Cabana opens a new Canna Cabana, then those local stores, they lose out on revenue. It's very similar to like what Walmart did to grocery stores and all of those companies in the 90s when they expanded. And Walmart just started capturing market share from grocery stores, clothing stores, automotive maintenance places. Everything that Walmart does, they started putting stress on those industries everywhere that they opened up stores. And so High Tide is sort of doing the exact same thing up in Canada, where if they open a Canna Cabana in your town, you can guarantee that every other cannabis retailer in that town is about to experience financial stress.
And I remember there was a story you told me that's really funny. It was when one of the stores was going to open in a town, and there was like this whole like movie scandal,
Yeah.
movie scandal in the sense that you would expect to be in a movie. What happened?
So it's not entirely clear who did it, but I can tell you based off of incentives who it almost certainly was. Somebody hired a street thug to try to burn down 3 Canna Cabanas in the same small town, and so they showed up at like 4:30 in the morning. They threw bricks through the windows. They're throwing Molotov cocktails in, and this is because they're so pissed off about being driven out of business by some corporate out of towner that they hired a street thug to do this. Now, I think it was a local ma and pa store because it does not make sense for a competitor like, say, Nova or Sundial or Tilray or whatever to only burn down 3 stores in one small town. It sort of makes a whole lot more sense if the person doing this was a local store owner who is either about to be driven out of business or was super pissed about already having been driven out of business. And so they're willing to break the law in order to try to regain an edge that they lost to High Tide. And so all 3 of those stores were reopened like within 24 hours. The damages were not major. And that is a clear indication to me as a shareholder that this company is super competitive. Customers love them, competitors hate them. That's you want those qualities in a company you're invested in. You want the competitor to consider your company the problem. Like they need to be, it needs to be truly unfair. Like what I tell people all the time, it needs to be like watching 22-year-old Mike Tyson beat up middle schoolers. Like it needs to be absolutely obvious that one company has a clear advantage over the rest. And that's what I look for, like with all investments, is like you need to find some sort of a situation that is just absolutely unfair, and then you invest in whoever just is breaking the game. They don't break the rules, they break the game.
Peter Thiel has a quote, depending on how you feel about it, you may not like it, but just focus on the words, and this to the audience. So like he said something along the lines of, and I'm going to paraphrase just in case it's not exactly precise, but he says, I like to own and invest in companies that have a right to win. And so what he's saying exactly is that in that statement, owning a business that has such a clear advantage, you see it in both the numbers, like where the competition doesn't have an answer to you.
Yeah.
Where they look at you and they think you're the enemy.
Yeah.
So, and in this case, I mean, running your competitors out of business, all that jazz. Okay, what are your thoughts on the big tobacco coming into this space? And well, it's not a threat to High Tide. So we're kind of deviating into another kind of discussion, but
it could be a problem for high tide. So in general, I think the big tobacco players are all, as soon as it makes sense for them to do so. So likely translate that to soon. I don't know when, but soon. They're going to start taking their massive cash flow and they're going to start buying up cannabis companies. So the tobacco industry is already in a sunset industry. At the end of World War II, roughly half of Americans smoked. Now it's down to like 10, 11% or something like that. And so because of this, they've been forced to become extremely efficient with their business models. They've been forced to push costs onto other people. They push risk onto other people. They have grown their margins dramatically over the last several decades. They already know how to run a really effective business. They already have a huge amount of distribution set up. They already have relationships with basically every gas station in the country, stuff like that. And I think that they're going to buy themselves a business life cycle extension by branching into cannabis as a way for them to make sure that they don't die. The risk to high tide is that it is possible that high tide gets bought up by like, Altria or British American Tobacco or something like that. And then they somehow decide for whatever reason to replace Raj Grover. Because the CEO, he's built this company up for the last 15 years. And the risk is that if High Tide ever gets bought out by a really large tobacco company, and then they replace Raj with somebody who doesn't actually understand this industry, like they're a tobacco veteran, but not a cannabis veteran, it is possible the company gets mismanaged. I suppose at that point it won't be its own separate company. It'll just become a branch of British American Tobacco or a branch of Altria Group. But it is possible that the business model will somehow fail because it's not managed by someone who actually understands why things are done the way that they are.
so I wanted to say though, oh no, this is a question that I don't know if we have the answer to, but my counterpoint on that is I don't know if like the tobacco companies want to get involved in the retail side. I think they would want to just stay in the brands and retail. You have a couple players that might want to acquire you. You have, well, first of all, it is not an impossibility that anything retail-esque from the United States or from Canada, a larger player like you have, sorry for you Frenchies out there, Alimentation Couche-Tard, right? They come in, which I wanted to pose as like a threat, right? Playing war games here. You have a competitor going bankrupt. You have all these licenses available. Is High Tide going to try to acquire that for more stores? Or I'm afraid of the formerly mentioned company that has a huge pocketbook and has a history of M&A, and I know wants to break into, selling cannabis in Canada, and it's a Canadian company. Maybe they come in and buy that up. I think they'd be a likely candidate to buy up High Tide more than like a British American Tobacco, because I mean, Alimentation Couche-Tard has like really good relationship with the tobacco players. I mean, they're a huge portion of their sales. They own a ton of gas stations. They also bought, because they have bought non-gas stations. That's why I'm saying like they're a potentiality here, and it's like pretty much within. I just saw that. I was like, all right, well, that has to go. Pretty much, pretty much, would not be outside of the realm of reason, I think, for that to happen. But I wanted to touch upon that. Do you think that's a threat? Right? We have, well, now I'm self-conscious about saying the word Couche-Tard. I'm just not even trying to Couche-Tard.
Yeah.
Okay.
So it's a double-edged sword as to whether it's a threat or not. If a company like that steps in and buys the company and just hands Raj a bunch of money and says, have at it, you've already proven yourself capable, take this business model and expand to other countries, finish filling out Canada, do your thing. If Raj gets handed a bunch of money and then a long leash on what he can do with that money, I think it would be fantastic for High Tide. However, if they decide that they can do it better, or if they decide to hand him money and put a bunch of stipulations on it that limits what he can do with the money, it is possible to hinder the maximum potential growth curve that the company could experience. It all has to do with what kind of relationship is there between the new owner and the old manager. And if that is a healthy relationship, that has the potential to be very positive for High Tide, especially Like, if one of the big tobacco companies steps in and they're like, "Hey, we've seen what you've done with like 20 or 30 million in the bank. We've seen what you've done with very small assets. Let's see what you can do if I hand you like 400 million or 200 million. If I hand you a really large pile of cash, what can you do for us over the next several years as far as growing out your business model and producing cash flow?" I'm convinced that it's a double-edged sword, and a lot of it has to do with who buys high tide and why. It is also possible, like you mentioned, that it never gets bought because no one is interested in retail, right? This is one of those companies that's flying under the radar because a majority of cannabis investors, they believe that the profits are in growing it and selling it to end use customers. And High Tide believes growing it is a joke. Don't do that. You just want to buy it wholesale and sell it to end use customers. And as the industry matures, I'm convinced that it's going to take a while, but more and more people are going to slowly catch on to the idea that it's being commoditized, where producers are not making very much, and people that are able, businesses that are able to provide some kind of value added experience are going to be the ones that really benefit in the long run as the industry matures, because they're going to be able to upsell you. Everything from like McDonald's trying to talk you into buying a bigger drink versus like I was saying earlier, there's a reason why Starbucks doesn't actually grow a whole lot of beans. I mean, it's like 1% of the coffee they sell is from beans that they actually grow themselves, and it's because it doesn't really make a whole lot of sense to, once the commodity becomes commoditized, and it's a fungible good. I know everybody talks about, oh, it's not fungible because people have their specific brands that they like and their specific flavors, and all I can think is it's like wine. Like a small percentage of the population will always be snobbish about exactly what type of wine they're drinking, but most people don't really care. As long as it tastes good, it's great. I'll have some more. Can I have another glass? That, like, a lot of it comes down to attitude and what percentage of the population treats it like a fungible good versus what percentage of the population doesn't. And that will definitely affect like long-term outlooks of the industry. And I think right now there's a cultural shift where cannabis investors, they're still convinced that growing it is the place to be, where they want to park their money. And then maybe 3 to 5 years from now, it'll become super clear to the rest of the industry, to the rest of the sector, to the rest of the investors that are involved, that they should have had their money in retail all along. Because as the commodity becomes commoditized and becomes ever more fungible, and the costs come down more and more, it's really hard to actually make money growing it.
Yeah. And with the companies like High Tide, I'm just gonna beat the drum here a little bit more because and then I'll try to put a bear hat back on. But
Okay.
um, what I like about businesses like this, once they have figured out the secret sauce, right, operationally,
Yeah.
replicating it again and again and again and again is really attractive. This is something that both Peter Lynch have talked about, and I think Bill Ackman has talked about regarding restaurants. Retail is not too different from that. If you look at the olden days of Sam Walton, once he figured out the secret sauce for a Walmart store, every new Walmart store from that era of growth for Walmart, it was just growth galore. So if High Tide, and I'm trying not to equate the two, that's why I stopped there for a second, because this is not the same.
Yeah.
We're not saying that High Tide is like the next Walmart, far from it, but just getting that principle down within this space in the retail side. If they figured out the secret sauce here, we'll start to see that in the numbers. And I think we've already seen that. I think for a lot of investors out there, for there to be a multiple re-rate, they have to convince a lot of other investors that, one, they're not exposed to the same risks that everyone's concerned about. I think, have you ever heard the term of industry scarring?
Maybe once or twice. Elaborate on it.
So industry scarring, I mean, there's recently a business that I'll talk to you off camera about it. The members already, you guys know this, but this is because I don't know the timing of this release versus the pitch release, but you'll see why. There's an industry that I recently invested quite a sum of money into, and industry scarring typically happens when there's some big event, some traumatic event. It could be a Great Recession, it could be the dot-com bubble or something, and that maybe that type of business was pretty involved in what happened, right? And the punishment was quite severe. So what we start to see is, for example, you could see multiples re-rated permanently lower, or at least temporarily for our time. But as far as we can see, multiples have re-rated lower relative to even before the issue was even a thing. There are a couple of things that could explain that. We could see that it's actually gotten worse for these kinds of businesses. Maybe not. We would see that in stuff like, what are the margins looking like? Maybe the margins have come down. Maybe the margins are up, and the multiple is actually lower than it was when margins were lower. And then that's maybe a hint that you could get at for something like industry scarring, where the market participants have sort of determined, I don't want involvement in that kind of company, because remembering what recently happened, and this industry might be going through that, where there's some names in here that maybe will work out, and the ones that will work out, maybe they're going to be really cheap, right? But people don't want to get involved in it. And you might be actually looking, and I want to be careful, because I'm trying not to say it's like, oh, this is a clear, cut and dry, easy money investment. There's no such thing as easy money. There's risks here. But I'm saying that in hindsight, it might look like this company was really, really, really cheap, right? But it's explained, or we can sort of kind of cope with why the opportunity was there by pointing out that the market itself just didn't want participation in any of these kinds of assets. That's why it's cheap. That's why if this company was doing these kinds of numbers and it was another kind of business, it's just same retail. So still retail version of analysis, I think it would have a completely different multiple. I don't think I wouldn't have been able to purchase it for near 10 times free cash flow.
Wow.
Yeah. So
yeah, we'll talk about that off camera. Because now I'm curious. Now I'm curious what company and what industry it is that you're talking about.
Yeah. The club members who are watching, you guys all know what this company is. If you guys don't know, go check out portfolio updates, and you'll be up to date real quick. So, but yes, I would like to talk to you about it off camera. So I think that pretty much covers any of my questions I had. Trying to remember if there was one more bear argument, because I think I said Alimentation Couche-Tard, they're trying to get in there, and maybe they buy up the licenses of this fallen competitors. We already talked about. Okay, so for paraphernalia, is there any distinction there between theirs and someone else's?
My impression is that theirs is cheaper because instead of being locally produced by someone who lives in North America, it's being produced in like Thailand, Indonesia, India, Malaysia, and then put on a shipping container and shipped all the way across the Pacific to North America and Europe, and the margins are a lot better. So if you, let's say you own a cannabis oriented store here in the US, you have your choice of trying to find local producers, or you can just get on these websites and order directly from a High Tide owned website and probably end up paying less. It's sort of, they've already sort of cornered that market where their products are high quality and really cheap. And so if you're a business, you're going to look for the best opportunity that you can. And right now, and for the last 3 years, it's been High Tide.
Well, then that's the answer there.
Yeah. I also get a lot of questions about the new CFO and why
that's the one. I was like,
that was
something's
the one. Okay. So a lot of people are like, gosh, they just got a new CFO. Why did they have to get rid of the last one? And the reason is because the last one, the most recent one they just got rid of, was always only ever going to be temporary. So like a year and a half ago, maybe 2 years ago now, they had grown rapidly. They had bought websites. They had bought a CBD company. They were doubling their revenue every year. They were putting up stores like mad. And they found a material weakness in their internal accounting that they were not going to be able to fix quickly. And the part of it is because they had all these disparate. They had all these separate accounting systems from all these companies that they'd acquired and stuff. And they were having a real big trouble getting everything conglomerated into one so that they could actually accurately report net income. So now this was more than a year ago. This was 2 years ago, maybe 2.5 years ago, right in there. And so it wasn't a big problem because the only real issue was their inability to accurately report net income, and the company's not net income positive, so it's not a big deal. So they knew they had time to fix it. So they hired a specialist consultant to come in and help them rearrange their entire accounting network so that they were going to be able to start producing accurate estimates for net income through all of their separate subsidiaries and segments and everything, all conglomerated into one statement. And the original CFO, he ended up quitting like 3 months into this process, where he's just like, I can't do this. This is beyond me. This is too stressful. When they hired him, they only had like 8 stores, no websites, no other companies. So I think he was just overwhelmed. So the consultant that they hired, that they had already been working with for like 3 or 4 months, 2 or 3 months, right in there, they just had him step up into the CFO position. But they did not hire him because he was a well-rounded CFO. They hired him specifically to rearrange their internal accounting to make it faster, more accurate, all that stuff, to make everything interlinked. And so he was not a total package CFO. He was really just some specialist that they hired on as a consultant, and then their primary CFO like gave up, and then they just hired the temporary consultant as a temporary CFO, and then he's been doing a fine job for like more than a year now. And then he parted on very good terms. The company had very nice things to say about him, and they replaced him with a more capable CFO that already has a long history of international mergers and acquisitions. And so,
International mergers and acquisitions. I
yeah,
see what.
yeah. So the last CFO that they just let go of, he was always only temporary. That's the way I look at it. And he did a fine job of getting everything rearranged and everything, all the T's crossed, all the I's dotted, but he did not have the skill set that they're after for going forward in the future. So I think he did a great job, but it was time to let him go and move on to somebody who's going to be able to help them expand in Germany and in the US with more skill and more nimbleness and adaptability.
Well, that answers that question. I'm satisfied with that one. Just yeah, okay. So it's consultant was always temporary. Now they
Yeah,
have a new CEO with an interesting experience
yeah,
toolkit that is precisely the kind of guy they would probably need
yes,
if they wanted to expand into a place like Germany.
yeah. And
Because you're
I have not thoroughly researched the new CFO, but when they made the statement, "Hey, we're hiring this guy," they made sure to emphasize he has experience with international M&A.
which is what is needed right now.
Yeah, that's what's needed right now. Yeah.
Yeah, when I looked through the various public interviews of the CFO Raj, the CFO CEO Raj, I got good impersonation. I got this joke question that I'm going to ask you because the club members were asking as a joke at this point,
Uh-huh.
and they were asking, "Are there any felonies in the company?" It's just because a lot of there's been some companies. I know the answer is no. Obviously, Raj
I,
is clean.
yeah, yeah.
And he comes from an interesting background of like you already said it actually earlier. His whole family, they have this experience with like international shipments.
Mhm.
And so him getting into this is it all started from that. And now it's actually probably the biggest business in this family potentially. But
Yeah, I think that a big part of what he does is for bragging rights when he goes back to for his like first cousin's wedding or whatever. The whole reason that he like is super driven to make sure this company succeeds is so he can brag to all his uncles. Like I really think that's a big factor of what's going on. So he can one up his brother. I don't even know if he has a brother. So he can one up his brother, all that stuff. So he can prove everybody wrong, everyone who ever doubted him. So you ask about felonies, okay? I don't think Raj has ever done any felonies or anything. However, the company has been accused. Remember, it's hyper competitive. Customers love them. Competitors hate them. So the company has been accused by multiple people of having like a data fees scheme where if you are a grower and you want to get your product on High Tide shelves, The only way to do that is to also pay for their the data aggregation software, where you have to pay into Cabanalytics in order to get your products on the shelves. Now, the CEO has repeatedly insisted this is not true. That anybody can buy Cabanalytics. You don't have to buy Cabanalytics in order to get your products on my shelves. However, some of their competitors have insisted that this is true. So I can cite one person that I know that you can go find him on Twitter. His name is Shane Morris. He's a doctor. Yeah, Dr. Shane Morris. He has on more than one occasion, he has implied that High Tide is doing something nefarious. And you're welcome to reach out to this guy. I think he's just plain wrong. But he is friends with people that are growers, let this sink in, that cannot seem to get their stuff on High Tide shelves. So there's some bad blood there because they feel left behind or left out or somehow not part of the club. And so I don't think these accusations are real, but I do think they have happened, So I don't think that the company has ever done any sort of missteps like that, but they are currently under scrutiny from a small group of people that are insisting that they're playing dirty.
Okay, so this Dr. Shane Morris guy,
Yeah.
I'll reach out to him. But you said something interesting there. Is it detrimental to me as a grower to not have my product on the High Tide shelf?
Well, yeah, I'd say so because they already have 10% of the market, and they have more than 10% of the people that are after discounts. So if you're trying to sell like ultra snazzy, high end, ultra expensive cannabis, you probably don't care. If you're just trying to get your stuff sold like quickly for a reasonable price for some margin at all, then you probably do care because this company has the potential to take all of it off your hands. In an environment where it's difficult to sell everything that you produce, finding a high turnover retailer like this to unload your excess production into, that is a high value situation right there. You want to have a relationship with someone who can just buy it all if they want to. And High Tide is one of the few people in Canada that can do that. And so it's being friends with the company in a business relationship with them is something that is going to be situationally dependent, but some people are going to view it as very important, and some people are not going to view it as very important at all.
Because I want to be careful with these analogies because I stop myself mid-sentence because I'm like, oh, something, but there's one of the reasons what I bought Netflix back in 2022, and everyone hated Netflix in 2022. And there was something I recall the director of the movie. It's a movie from Bollywood called Triple R or RRR. Have you heard of it?
No.
The movie's irrelevant. It's a good movie, but the movie's irrelevant for what the director had to say or the producer had to say. And it was the following. I'm paraphrasing. We need to get our movie on Netflix.
Okay.
I love that phrase because that phrase tells me a lot. And I was already convinced on the Netflix story. But when someone says something like that, or in this case, when a producer is upset that they're not getting on your shelf, well, maybe there's something here. Maybe there's something about this business. Now, I said I did want to be careful with that analogy because two different businesses. Netflix is going to be much bigger than High Tide's long-term potential for sure. It's completely different levels of scaling, completely different levels of profit. But just keeping it to that, it's something that I tend to like to hear. I like to hear that the competitors are angry or mad, upset. I like to hear that customers are happy. Because this is something I'm also paying attention to. Do you know what the employees feel like working there? Are they happy?
When I read reviews from employees, they're facing a psychological situation where the line of customers never dies. And so if you don't like your job, it is like a nightmare to go to work. But if you like your job and you like talking to people all day long and you like being in a crowded environment, many of them enjoy it. And one of the things that I've heard as a complaint is that they're all overworked because the stores are so busy. and they never get like a free 5 minutes just to chill and slack off, because that basically doesn't happen, because the line out the door never ends for as long as the stores are open. So some employees are very happy about that. Some employees are very not happy about that, and it's definitely a mixed bag.
Okay. Do you know what the comp is relative to competitors?
I do not. I haven't looked into if they're being paid well, if maybe the store managers might be paid well, but the people, the clerks or whatever, are not. I haven't looked into any of that situation. In fact, if you do and you find out, please let me know, because now I'm curious.
Definitely. Yeah, because one thing I started to also pencil out through like one of the filters of businesses is I tend to find that the greatest businesses have a ability to attract talent across the whole organization. And then when the company starts to begin to maybe mature and die off, you actually do tend to see that talent doesn't really want to work there. Maybe they want to work at a competitor.
Sure.
'Cause talent's very important. So because people have this, I guess, misconception. I think it's a misconception that in order to succeed, you have to have, just have terrible working conditions and no one's happy working there, etc. So, all right. So I think you've answered all my questions. I don't know if the audience has any other questions you want me to ask. So club members, feel free to comment them right now. Milk Shakespeare, I see that you're saying if rumors are true. If you elaborate on which rumors.
He might be talking about the data fees rumors,
Okay.
which are mostly coming from a small circle of affiliated people that are all upset that their products are not on High Tide shelves, and they can't seem to get on High Tide shelves. So they're working up this narrative about how the reason why is because they're not paying the bribe. And
Okay.
as far as I can tell, that's not even a real narrative. It's just like this way of coping with the fact that like there's so much competition that you can't get your products on shelves.
Okay. Okay. It's worth investigating because
Sure.
I'd love to just see like, hey, Bear, talk to me.
Yeah.
Tell me
Yeah.
tell me what you think. And then if they say their side and
Yeah.
it's not convincing,
Sure.
you know what that tells us? We buy
Right.
more.
Right. I would definitely try to reach out to him in such a way that he can respond to you privately instead of in public, because he's already been sent a cease and desist letter.
By High Tide?
Yeah, for spreading rumors on Twitter that were not evidence based about the data fees. Yeah.
I
So
see.
shoot him an email or contact him on Twitter and give him your email or something. But if his evidence is real, I want to hear it. I want to hear the bear case. I want to hear the good and the bad.
Okay. All right. With that being said, if there are no other further questions, thank you guys so much for joining in today. And if you're watching this publicly, well, feel free to like, share, and subscribe. This will be airing publicly in about 3 weeks or so. But club members, hope you guys enjoyed this. And thank you, Blake, for coming on tonight or today. It's not night yet, is it? No. Well, it's evening. It's evening. It's close enough. Thank you for coming on tonight. And with that being said, I'll see you guys all on the next one. And we'll talk right now after stream.
Sure.